Now, in this video, I want to talk about the short Australian dollar against the US dollar position. Now, it looks like the Australian dollar is getting smashed. You can see there's been a long downtrend and then a profit-taking candlestick. And it's bounced back up. It hasn't really been able to regain its prior price. It's gone nowhere. Let's look to break down. It's come back up, so it's shown a bit of the bulls coming back in, but then it's kind of showing weakness again, and it's looking to break down again. So from a long-term perspective, this is a trade that I could really see going down to 0.6. If you look at that, that's already broken past the critical support, and I expect weakness to continue, giving the whole trade war thing and also the risk-off sentiment that's beginning to develop in the markets. So the source of this was the weekly trade review, and I've kind of just taken what I had from a previous video. Same sort of rationale behind the trade. It should work if risk off develops in the market and the trade war escalates, as the Australian dollar will probably get smashed more than the US dollar. It should also work if the trade war de-escalates and the US dollar pops up. Now, the time frame is about a year. System-wise, it's a trade with limited downside risk and potentially great upside reward, as likely to do okay in both scenarios of a trade war escalation or de-escalation. At this moment in time, the main narrative in the markets is the trade war, so I think this is a pretty good trade that should hopefully work both ways. Now, the correlation on this is that it does add to my short Australian dollar exposure, which is good. It's really going to bring my Australian dollar exposure up. I don't have a lot of that. Well, that's not entirely true. I do have a decent amount. I would like to increase it, given that a lot of the portfolio sits in Australian dollars. Technical wise, yes, it has pierced that long-term support line, as I mentioned previously, about the profit-taking candlesticks developing and price action not really recovering after that development. And also the fact that it's just gone sideways for quite a while now. Intermarket wise, US dollar is certainly recovering. So that is definitely something that's strong for the trade. So if you look at the price action of the US dollar, that's been quite bullish. The Australian dollar against the US dollar, that reflects a fairly kind of what you would expect US dollar strength equating to weakness in the Australian dollar against the US dollar. Russell 2000, it's looking like it's going to break lower. It's just weakness really developing there. Fundamentally, the Australian economy has been recession-free for probably too long, and it is possible that the trade war will hit Australia. Now, sentiment is risk-off, and as I mentioned, the narrative is there's worries about the trade war. Now, looking at a 10% chance for it to go to 0.6, there, 10% chance that'll go to 0.65, 20% chance it'll go to 0.66. Okay. 30% chance it'll go nowhere. 10% chance it'll go to 0.68. Back up. And 10% chance it'll go to 0.7. There. And another 10% chance it'll go to 0.72. As always, price moves for me, I'll add to position. If price doesn't, I'll leg out. Now, psychologically, I think I may be encouraged by my recent success and the fact that the Trump tweet on escalating the trade war has helped my other positions. So there's a potentially unwarranted confidence that has made me want to take on more risk. In terms of the actual trade itself, I'd be looking to get in at around the price it is now, 0.674. Stop loss at 0.71. So probably easier to see that on the daily. Stop loss above that point here. Profit target of 0.6, and it was going to increase my risk in the Australian dollar against the US dollar by 1.28%. So I think that's a decent trade, and we'll see how it all goes.